Hi friends, hope you are doing well. In today's video, we'll discuss one very interesting ruling recently delivered by the Mumbai Tribunal, and the issue pertains to setup of short-term capital loss against the long-term capital gain. So let's see the ruling. So yeah, there were two appeals, ACIT Circle 411 Mumbai versus Ranu Vora and Ranu Vora versus ACIT Circle 411 Mumbai. So let's directly jump into the facts of the case. The solitary issue arising for consideration is in relation to the setup of short-term capital loss of 9 crore 11 lakh 83,666 against a long-term capital gain of 16 crore 81 lakh 07,825. Briefly, the facts relating to the issue are: SC is a resident individual in assessment year under the dispute, that is AY 1617. The SSC filed its return income declaring income of 15 crore 87 lakh 53,630. In course of the assessment proceedings, AO, while verifying the return of income, noticed that in the year under consideration, SSC has sold 1 crore 23 lakh 73,872 shares of the Avendus Capital Private Limited on 2nd February 16 and derived long-term capital gain of 16 crore 81 lakh 07,825. As against the capital gain so derived, the SSC has set off the short-term capital loss of 9 crore, comprising mainly a short-term capital loss of 9 crore 81 lakh from the sale shares of Mindtree Limited. On further verification, he found that the shares of the Mindtree were purchased by the SSC between 17th of February to 4th of March, whereas they were sold during the period 9th March to 31st March, as stated by the AO. Upon search being made in internet, he found that the Mindtree Limited had announced issuance of bonus shares on 18th of January 2016 at the ratio of 1:1. He observed that as a result of issue of bonus shares, the price of the shares reduced almost to half its original price. According to AO, taking advantage of such reduction in price of shares, the SSC sold the share purchased earlier, resulting in short-term capital loss of 9 crore. According to AO, by adopting colorable device of selling of shares, Mindtree Limited, having anticipated the reduction in price due to the issuance of bonus shares, the SSC arranged its affairs in a manner so as to derive maximum benefit by selling the shares purchased earlier at a loss and deferring the sale of bonus shares to the future date so as to derive exempt long-term capital gain. Thus, ultimately, he concluded that by adopting unfair means of SSC has reduced tax liability on account of LTCG derived on sale of Avendus Capital Limited. Accordingly, he disallowed the entire short-term capital loss and added back to the income of the SSC as long-term capital gain. And the SSC contested aforesaid before the first appellate authority. So basically, this is a case of bonus stripping, which was allowed earlier, but from Finance Act 2022, this is not allowed now. After considering the submission of the SSC and verifying the facts and material on record, learned the first appellate authority deleted the addition holding that short-term capital loss having arisen out of legitimate transaction has to be set off again LTCG. Before, the DR relied upon the observation of EO, whereas learned counsel appearing for the SSC strongly supported decision of the first appellate authority. We have considered the rival submissions and pursued material on record insofar as the factual aspects of the issue is concerned. There is no dispute that during the year consideration, SSC had sold 47,376 shares of the Avendus Capital Limited and derived long-term capital gain of 16 crore. Further, in the year consideration, SSC has sold part of the shares of Mindtree and derived short-term capital loss of 9 crore. The shares of Mindtree Limited were purchased by the SSC between 17th of February to 4th of March and were sold during the period 9th March to 31st March. AO neither has disputed the facts nor has any dispute with regard to the genuineness of the acquisition of sale of shares. The only grievance AO is after the issuance of bonus shares, which resulted in reduction price of the shares of Mindtree Limited purchased by the SSC. The SSC, to reduce its tax liability, had sold the shares of Mindtree Limited to derive short-term capital loss and set off it against the LTCG. AO has further alleged that the SSC has deliberately deferred the sale of bonus shares to future dates to derive the long-term capital gain and claim exemption. In our view, the conclusion drawn by the AO is wholly irrational and unsustainable. When the transaction relating to the purchase and sale of shares were beyond doubt and are not in nature of sham transaction, even there is no such allegation by the AO, the short-term capital loss derived by the SSE from the sale of shares cannot be prevented from being set off against the long-term capital gain by alleging adoption of the colorable device. There is no requirement under the law that the SSE has to pay more tax. If the SSE arranges her affairs with the legal framework and through the legitimate means to reduce its tax liability, the AO cannot prevent her from doing so. When there is no evidence on record to doubt that the genuineness of the transaction entered by the SSE, the resultant capital loss derived out of such transaction cannot be disallowed. More so, when the AO has not expressed any doubt or dispute regarding the nature of loss being capital, even as rightly observed by the first appellate authority, the AO has accepted the computation of short-term capital loss made by the SSE. It is further observed that long-term capital gain shown by the SSE on sale of bonus shares has been accepted in subsequent years as well. That being the factual position emerging on record, we do not find any informative decision of the first appellate authority. While coming the conclusion, we have drawn support from the decision of the Honorable Jurisdiction High Court in case of the Cyrus Poonawalla. Accordingly, grounds are allowed. In the result, the appeal is allowed. So friends, this is typical case of the bonus stripping, where people used to buy shares after bonus declaration when price is reduced and then sell them. So based on FIFO method, they used to incur the huge short-term capital loss, and afterwards, when they sell shares, remaining shares, that is bonus shares, they will also incur the capital long-term capital gain, which was used to exempt. But फर्स्ट अप्रैल 2023 से ये जो बोनस ट्रिपिंग डिवाइस है उसको एंटी अवॉइडेंस प्रोविजन इंसर्ट करके उसको रिफ्यूज कर दिया है इनकम टैक्स लॉ में. लेट्स सी दैट प्रोविजन एज वेल. So section 94 avoidance of tax by certain transactions in securities. Let's jump to subsection 8. This related to where any person buys or acquires any securities or units within a period of 3 months prior to the record date. Such person is allotted additional securities or units without any payment on the basis of holding of such securities unit on such date. Such person sells or transfer all or any of the shares referred in clause A within a period of 9 months after such date while continuing to hold any additional shares units referred in B. Then the loss, if any, arising to him on account of such purchase and sale of any of the such units shall be ignored. यानी जो शॉर्ट टर्म कैपिटल लॉस होगा वो इग्नोर होगा फॉर द पर्पस ऑफ कंप्यूटिंग हिज इनकम चार्जेबल टू टैक्स and notwithstanding anything contained in any other provision of this act, the amount of loss so ignored shall be deemed to be the cost of purchase or acquisition of such additional securities as referred in B as held him by the date of such transfer. For the purpose of this section, let's see, securities include stocks and shares as well. So पहले सेक्शन 8 में ओनली जो म्यूचुअल फंड के यूनिट्स थे वो ही इंक्लूडेड थे, बट इसको अभी स्टॉक्स एंड शेयर्स को भी यहाँ जो बोनस ट्रिपिंग है उसमें इंक्लूड करके इस प्रोविजन को एंटी अवेंडेंस उन्होंने डिक्लेयर कर दिया है. So since this case pertains to AY 1617, this was allowed, but after 1st April 2023 this is not allowed under the income tax law. I hope ये वीडियो आपको पसंद आई होगी. Thanks for watching this video. Have a good day.